penny stocks are those stocks that have a price under $5. These stocks come with high risk and high rewards for their investors. The reason for this is the low liquidity of penny stocks compared to more established ones. They often tend to go through more enormous swings in prices in either direction, hence are more volatile. On the other hand, they also offer investors an opportunity to enter a company at a very early stage and low price. This can lead to potential massive gains if the company succeeds. Hence, those investors that are willing to take risks that could possibly land potential multi-bagger penny stocks with good fundamentals. A thorough analysis of penny stocks before investing in them can prove helpful in determining which are the best ones to invest in. Therefore, we have compiled a list of the best penny stocks under $5 to invest in for potential gains. Up first on our list for today is a California-based company that provides genome analysis software solutions to the healthcare industry, Bionano Genomics Incorporated. Trading under the ticker symbol BNGO, this life sciences instrumentation company helps researchers and clinicians to speed up their search for new diagnostics and therapeutic targets while streamlining cytogenetics. Its primary product is Sapphire, which is a sample-to-result solution for detecting and understanding structural variations in DNA. This in turn helps researchers and medical professionals with accurately assessing and treating tumors as well as genetic aberrations. Moreover, this solution enables professionals to detect cancer and genetic disorders earlier for more effective treatments. In the latest quarterly financials, Bionano's revenue surged by a healthy 55% year-over-year to reach $7.22 million. Furthermore, the worldwide deployment number of Sapphire devices soared by 54%. The balance sheet remained strong, with $180.2 million in cash and cash equivalents at the end of the third quarter of 2022. What's more, that its revenue is forecasted to improve by 53% annually on average over the next 3 years. This compares to a 6% growth forecast for the life sciences industry in the US. Additionally, the company recently announced the launch of Bionano Laboratories, which will combine its optical genome mapping data services with clinical testing services that were previously offered by Lineagen, Bionano's personal genomics and biotechnology company. It has also launched its first OGM-based laboratory-developed test. Thus, its strong financials and continuous development puts this penny stock under $5 on track to bring many gains for its holders. Up next is a pure-play gold miner based in Canada, B2Gold Corporation, which is represented by the ticker symbol BTG. This stock brings speculation with diversification through exposure to precious metals like gold, which is considered a hedge against inflation. The company operates 3 mines located in the Philippines, Namibia, and Mali. Moreover, it also owns stakes in other mining companies with exploration assets in Finland and Uzbekistan. Additionally, it recently completed the acquisition of Oklo Resources Limited, a gold exploration company. This acquisition comes with Oklo's extensive land package near FueclCell mine, adding to B2Gold's land holdings. The company's FueclCell mine produces high-quality gold, with the capability of producing 3.4 grams of gold per ton mined. It is one of the most efficient mines in the world. In the third quarter of 2022, the company produced 227,016 ounces of gold, which is anticipated to improve significantly in the fourth quarter. Furthermore, it expects to fulfill the 2022 production guidance of 990,000 to 1,050,000 ounces of gold. The adjusted net income was 3 cents in the quarter. And the cash position remained strong, with $549 million in cash and equivalents, while working capital was $725 million. What makes this penny stock more interesting is that it pays a quarterly dividend with a current yield of 5%. The latest quarterly dividend was 4 cents per common share. B2Gold currently trades at 5.2 times its 2023 cash flow estimate. Hence, this is another interesting penny stock under $5 worth considering. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Coming next is a licensed cannabis cultivator based in Canada, Tilray Brands, which trades under the ticker symbol TLRY. Its primary segments are cannabis and hemp. The cannabis segment comprises adult use, medical, and bulk sales of cannabis. The company has operations in Canada, Europe, Australia, Latin America, and the US. Thus, with key international markets on the cusp of legalizing recreational weed, Tilray is set to benefit enormously. And with cannabis review being initiated under Biden's decision in the US, opportunities are building up for the company. To capitalize on the legalization efforts, Tilray has continued to expand its operations and presence through partnerships and acquisitions. In its big expansion plan for the US, the company recently acquired Montauk Brewing Company. This further strengthens its US portfolio, also including its strategic investments like Sweetwater Brewing Company, and the acquisition of Breckenridge Distillery. Moreover, it has also partnered with Charlotte's Web, with its CBD products now available through Tilray's distribution network. Despite the numerous headwinds in the cannabis market, along with rampant inflation and widespread economic instability, Tilray has been reporting encouraging numbers, with positive adjusted EBITDA for 14th consecutive quarters. Its balance sheet is also strong with around $500 million in cash. The company is guiding for $70 to $80 million in adjusted EBITDA, with free cash flow positiveness this fiscal year. Hence, with a leading position in the Canadian market, and strong prospects in other key international markets along with its growth strategy, Tilray is another penny stock worth adding to your portfolio. Up next is a global shipping and mailing technology company, Pitney Bowes. Trading under the ticker symbol PBI, the company was widely known for its postage meters and other mailing equipment and services, but has now expanded into e-commerce, software, and other technologies. The stock has faced much volatility this year, due to the supply chain bottlenecks and global supply chain disruptions, on top of the widespread economic and geopolitical instability. Nevertheless, Pitney Bowes has a high-quality business with a return of equity of around 50%, which is better than 92% of its peers. The company has been developing its e-commerce segment for quite some time now. Keeping up with the inflationary pressure and headwinds, it recently announced a price increase for e-commerce services. Moreover, its latest technology solution for e-commerce has been Pitney ShipCube, which is an all-in-one Wi-Fi-enabled thermal shipping label printer with built-in scale, the first of its kind. While the company's revenue was impacted by the market conditions, its earnings per share still exceeded analysts' expectations by 100%. Moreover, Pitney Bowes expects a positive free cash flow for fiscal 2022, and it also pays a quarterly dividend, with the latest being 5 cents per common share. Additionally, the company shares are significantly undervalued, trading well below the industry price to earnings. Its e-commerce segment is seemingly very undervalued and has significant potential. Thus, PBI is another great penny stock to be on the lookout for. The last stock on our list for today is of a company working in the renewable energy industry, FueclCell Energy Incorporated. Represented by the ticker symbol FCEL, the company is a leader in manufacturing fuel cell energy platforms for producing hydrogen and decarbonizing power. Operating the world's largest fuel cell energy facility in South Korea, it also has another big facility in the US. Its business model differs from peer in the sense that FueclCell Energy primarily relies on recurring revenue through license, partnerships and power purchase agreements. While its operating results haven't been impressive, the firm has outperformed revenue expectations with double-digit growth. In the latest quarterly earnings, its revenue grew by 59.3% year-over-year, to $43 million. However, the loss per share widened to 5 cents against the year earlier 4 cents. Cash and cash equivalents improved to $456.5 million in the quarter. The company is working on enhancing its product or solutions portfolio, with new innovations to support the accelerated clean energy transition. Its total addressable market is anticipated to reach roughly $2 trillion through 2030. Thus, the company's continued progress and burgeoning market opportunities has raised its confidence to deliver revenue of more than $300 million by the end of 2025. It expects to deliver revenue over $1 billion by the end of 2030. Even if the short-term market prospects are not great, FueclCell Energy does have the potential to deliver massive gains in the long term. That's all from us in today's video on penny stocks under $5 worth considering or buying. We hope that the insight we aimed to provide has been helpful in optimizing your investment portfolio. We would love to hear your thoughts on our list in the comments section below. For further insight into different stocks and the investment strategies they are best for, do check out our website stockstelegraph.com.